Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian shares tick higher after the S&P's best post-election day in history. The Fed and the BOE both look set to cut rates today, with Donald Trump's return clouding the outlook. Kamala Harris concedes the US election, promising a smooth transition of power. She tells supporters to keep fighting for their ideals.
While I concede this election, I do not concede the fight that fueled this campaign.
Plus, political turmoil in Germany. Chancellor Olaf Scholz calls a snap election after firing his finance minister as his coalition collapses over government borrowing plans. So some political clarity in the US, but a lack of political clarity now in Germany. The focus then on how the politics of Germany unfolds and what it means for the spending in that nation. Currently, though, the markets are still recalibrating around the president-elect Donald Trump. You saw that massive surge in stocks yesterday, with S&P adding around 2.5%, the Nasdaq adding around 2.7%, and a huge jump for the Russell 2000 small caps, jumping almost 6%. Again, for the S&P, the best post-election day in history. European futures looking to add 0.3% after a bit of a soft day for European stocks yesterday. The FTSE 100 looking to add 30 points. Commodities are up, and that certainly will help the FTSE 100 in the session today. S&P futures looking to gain 11 points. Nasdaq futures looking to add 59 points, up 0.3%. Let's flip the board and look cross-asset. You had a big move, of course, in terms of money out of US Treasuries yesterday. Yields up around 16 basis points on the 10-year. A little bit of calm now across the Treasury markets, given that recalibration yesterday. The Fed, of course, expected to cut later today, and the question marks over how far and how fast they can go in an environment where you have Trump in the White House and expectations of a more fiscally stimulatory environment. Currently, the 10-year yielding 4.42, euro-dollar at 107, gaining 0.1% after the rally of more than 1% for the dollar yesterday. The pound in focus for us today, of course, the BOE expected to cut by 25 points, but again, basis points. But again, it's a question as to what the path forward is for the BOE and how much more complicated that now is. 129 on the pound, Brent $75 a barrel, currently up 0.6%. Let's get to US politics then. Vice President Kamala Harris has publicly conceded defeat to Donald Trump after the Democrats' crushing loss. It comes as Republicans are on track for a clean sweep of the White House and Congress, with Democrats' hopes of flipping the US House now fading.
Earlier today, I spoke with President-elect Trump and congratulated him on his victory. I also told him that we will help him and his team with their transition, and that we will engage in a peaceful transfer of power.
OK, for more, let's bring in Bloomberg's Vonnie Quinn, who joins us from New York. Vonnie, what did the polls miss then that allowed Trump to pull off such a victory?
Yeah, Brexit reminiscent, right? We keep seeing this. In fact, this is the third time that Donald Trump has been underestimated by polls. We had been saying, running up to this, that they were neck and neck, the two candidates, in most states, in most polls, on an average of polls. The most egregiously wrong one was the one out of Iowa just last weekend, which showed Kamala Harris leading that state by 3 to 4 percentage points, when in actual fact, Donald Trump won it by 15 percentage points. So there are going to be a lot of looking back and trying to figure out how the polls went so wrong. We did ask Frank Luntz, a very respected pollster, why. He said it was simply a case of turnout. Every Trump supporter turned out to be a Trump voter. That wasn't the case for Kamala Harris. Not every person who talked about supporting Harris did actually turn up at the polls, and that could be one of the reasons why. Another reason, though, is that Trump made gains in almost every demographic and in almost every geography, including urban centres, even in New York, Chicago, Houston. Kamala Harris, even where she performed well, didn't outperform any other previous Democratic run.
Fonny, we talked about a potential clean sweep for the Republicans taking control. They've done that of the Senate, the presidency, and potentially now the House as well, although we know a number of seats are still being counted in California. What is the state of play for the House? Have they lost it?
No, they absolutely have not yet lost it, indeed. However, as you say, there are some toss-up states where we have seen Republicans make gains, which maybe makes it a little more likely right now, as we're speaking, that Republicans hold on to the House. But the California seats will be counted up to a week after the election, and then if there are recounts, that could even go further. So we will not know the outcome of the House for several days possibly yet. That said, it would be crucial for Democrats to retain control of the House in order for there to be some checks and balances, because as you've said, otherwise it's a red sweep. It would be very easy, at least for Donald Trump and his MAGA supporters, to try to get their agenda through. Although I will say that, some people like Terry Haynes of Pangea Policy suggest that there are some lone wolf senators that wouldn't always vote with Donald Trump. But look, if it is a red sweep, then clearly the path to his agenda is much easier for him.
OK, Fonny Quinn in New York, thank you very much indeed. The latest in terms of how we're looking at the House and, of course, how the pollsters got this one wrong, once again, at least many of them. Now, investors are positioning, and of course the markets did a much better job of predicting the outcome. Investors are positioning for a second Donald Trump presidency, with the S&P 500, of course, having its best post-election day in history. The index soaring 2.5%. 10-year yields as well, soaring 16 basis points yesterday. It's a bit more calm across the Treasury markets today. Let's bring in Bloomberg's Valerie Teitel, who has a finger on the pulse, of course, of the market reaction to all of this. Val, talk to us about how markets and traders are reacting then to the Trump victory.
Oh, boy, Tom, yesterday we were risk on to the max. We saw not just the S&P 500 have its best session post-election, but it set a new record high. And not just that, you had the Dow, you had the NASDAQ, you had the Mag 7 index, all closing at record highs yesterday. We're very positive about this U.S. exceptionalism trade coming back to the fore. This pro-growth U.S. narrative really helped lift stocks yesterday. If you flip on, I also want to talk about how we saw other stocks within the U.S. Really jump for it. We had bank stocks surging more than 10%. And, Tom, that was regional banks as well as the big Wall Street investment banks. We had Bitcoin surging to new highs late last night. That dollar strength really rocked the euro. It had its worst session in 4 years, down nearly 2%. And then lastly, those 30-year yields, we're all worried about the inflationary impulse from the more spending from a Trump regime. Those 30-year yields jumped 17 basis points. But the narrative in the afternoon did shift more strongly to this pro-growth narrative. And there's no better way to show it than what happened with dollar Mex yesterday. The Mexican peso, it slid nearly 3.5% weaker on worries over Trump tariffs. But then the market clearly changed its mind and it traded all the way back to flat because Mexico is a leveraged growth play exposed to the U.S. economy. We decided we weren't worried about those tariffs. We're fine being exposed in Mexico because it's a leverage play on the U.S. economy. We even saw this swing happen in oil as well, Tom. Oil was down 2%, but then during the afternoon session in the U.S., it rallied all the way back to unchanged because we're more positive now about this U.S. growth outlook.
So, Val, we have the Fed decision later today. To what extent does all of this, does the change in the political map of the U.S. change the course for the Fed going forward?
Oh, Tom, it makes it very complicated. Powell is going to face a lot of tough questions today, not just on the change of policy, but also on investors' mind what Trump told us just a few weeks ago about wanting to be more involved in Fed policy. Take a listen.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do? I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all.
So not only does Powell have to contend with questions over Federal Reserve independence, central bank independence, he's going to get a lot of questions on policy changes. He'll probably push all of this off, Tom, saying he's not going to speculate on policy changes and the Fed can't react until they actually see it on paper. But many questions still remain. For instance, are tariffs inflationary or do they hit growth more? Tax cuts, same dynamic there. Are they going to increase the deficit more and worries about Treasury supply growing? Or are they going going to boost growth? Deportation of migrants, is that going to tighten the labor market or hit growth? Energy policy, Trump has said, drill, baby, drill. If a drop in energy prices, is that going to boost growth or is that going to be a deflationary impulse? A lot of good questions that Powell will be asked today. I'm not sure if he's going to give us any specific answers, but this is always on investors' minds what surprises he could have in store for us this afternoon.
OK, Bloomberg's Valerie Teitel with a great breakdown of what to expect from the Fed and how they adjust and how they navigate to this new political reality and how the markets play catch-up as well. Val, thank you very much indeed. To the political reality of Germany now, where the Chancellor Olaf Scholz has called for a snap election after his fractious coalition collapsed over how to revive that country's ailing economy. The political crisis came to a head after Scholz dismissed his finance minister, saying he had refused to suspend rules limiting new government borrowing. For more, let's bring in Bloomberg's Europe executive editor, Chad Thomas, out of Berlin. Chad, take us through how we got to this point.
Hey, Tom. Well, this has been on a slow burn for really several weeks and months. And we all sort of thought that, to be quite frank, that this slow burn would continue on, where there was this threat that the government might collapse, but that they would continue on. The next election was scheduled to be in September of next year. But last night, it all blew up. Scholz came out and, in very pointed remarks, talked about his finance minister, Christian Lindner, who's from another party than Scholz, and said that his ego was so big he wasn't able to serve the government. He said that he was firing him. And then he called for a snap vote in Germany. How does this move from here? So in Germany, he actually needs to have a confidence vote in the parliament first. That is now scheduled for January. And then they want to have a snap election in March of next year. Already, though, the opposition is saying that that's way too long. They want this to happen more quickly. So we'll be watching closely today, Tom, to see how that all plays out and if this timeline actually gets pulled forward even further.
Yeah, well, we had a debate in the newsroom this morning about what snap actually means, because you push it into next year, it doesn't feel that snappy of a call, but maybe in the German context it is. What does it mean then, Chad, for Germany in the coming months, this political uncertainty?
Yeah, well, many people would say that this is absolutely the wrong time to be doing this. Germany, of course, is in an economic malaise. They're kind of caught between China and the U.S. You have President-elect Trump now coming back into the White House. Germany has been, in at least his previous administration, was really a target. And so many people, that was one of the reasons why people thought they would actually come together. But what they're now saying is that they will try to move quickly with this snap vote to bring some certainty to Germany so that they can move forward. By the way, the likely winner in all of this is the leader of the Christian Democrats. That's the center-right party here, the former party of long-term Chancellor Merkel. They're polling way ahead of everyone else at around 30% of the electorate. It's very likely that their leader, Friedrich Merz, will be the next chancellor after this snap vote.
OK, Bloomberg's Europe executive editor, Chad Thomas, on a crucial day and a crucial set of weeks and months, it seems, for the politics of Germany. And the team there will be kept very busy indeed, you would expect. Chad, thank you very much indeed. Now to the UK, the Bank of England is widely expected to cut interest rates by a quarter point today, 25 basis points. But last week's UK budget and, of course, Donald Trump's election have cast new uncertainty over future policy easing here in the UK as well. Joining us for a preview is our UK correspondent, Lizzie Burden. Lizzie, set us up for today's decision. What do we expect?
Well, we have got inflation back below the Bank of England's 2% target, so it's pretty nailed on that we're going to have this quarter point cut today, which means the focus, as you say, very much on the path ahead. We've had a couple of spanners thrown into the works in the past week. We've had Rachel Reeves's budget and the reaction to it in the gilt market, the biggest fiscal loosening in decades, seen by traders to slow the pace of rate cuts here in the UK. But then, on the other hand, Donald Trump's victory also prompting a repricing of BOE cuts because of the impact to growth from tariffs. So Goldman Sachs changing their growth forecast for the UK yesterday, cutting it. You saw actually the pound up against the euro but down against the dollar. So that suggests markets think that the UK will be less hit than the rest of Europe. But then we had JP Morgan Asset Management's Karen Ward weighing in and saying the fiscal response from Europe could actually be inflationary. So it's going to be really interesting to see how the Bank of England processes all of that, whether they upgrade their forecast for growth and inflation off the back of the budget. It's far too soon to be putting in the impact from the US election, but maybe we'll hear about it in the rhetoric from Andrew Bailey. Recently, of course, he's been talking about more aggressive policy. That's in contrast to his more cautious chief economist, Hugh Pill. But when you look at the market pricing at the moment, there is a question mark over December, a 1 in 4 chance less than priced for a cut then, and only 3 cuts fully priced by the end of 2025. So at the moment, it looks like the BOE next year is going to be slower to ease than the ECB and the Fed.
Yeah, and as you say, those complexities are real, aren't they, for policymakers at the BOE and other central banks. Lizzie Burton, thank you very much indeed with the preview of the BOE, and Lizzie will be covering all of that for us, of course, in detail throughout today. We're going to bring you that Bank of England rate decision later today. Viewers in the UK will see the special coverage, of course, of the press conference starting at 12:30 p.m. London time. Follow that on TV and live on the terminal. Later, we're going to be speaking with the UK's central bank governor, Andrew Bailey, about the decision and the outlook for rates. Coming up, Donald Trump's decisive victory has sent shockwaves across the Atlantic. Europe's leaders are meeting today with the president-elect's positions on NATO and the war in Ukraine high on the agenda. We are live in Berlin with the reaction. This is Bloomberg. Welcome back. Happy Thursday. European leaders have rushed to congratulate Donald Trump after his election victory, but concerns linger over the president-elect's desire to end the war in Ukraine. EU leaders will be meeting today. There will be plenty, of course, to discuss. For more, let's bring in Bloomberg's Oliver Crook, who is on the ground for us in Budapest. Ollie, mixed feelings then amongst European leaders. You had the likes of Viktor Orban, of course, on one side, the Germans arguably on the other, about this Trump presidency. What can we expect from the meeting today? What are you going to be looking for, Ollie?
Yeah, that's right, Tom. And we should probably explain where we are. We're in Puskás Arena, which is where the actually EU leaders and actually European political community leaders will be meeting here in Hungary. This is where Viktor Orban decided to host this meeting. And really front and center for them, though officially not really on the agenda, will be the Trump re-election in the United States. This has obviously seismic ramifications for Europeans and the leaders here, many of whom are obviously not terribly pleased with that outcome. And that is going to be the focus of discussions in terms of coming up with responses to what the Trump administration might portend, particularly in the case of Ukraine. Remember, Trump has said on several occasions that he will end the war in Ukraine within 24 hours of winning the election. We're almost up on that time. The question is, for many of these leaders, if he comes with some sort of deal that requires surrendering territory, what will they say? I put that question to the Estonian Prime Minister, whom I spoke to last night here in Budapest. Have a listen.
If you allow Russia to change borders by force, and they're saying, yeah, we will give half of your country to your back, so it's not acceptable, I would say, to Europe. It probably will be a stigmata for a long time.
So this will be one of the major questions before our European leaders here. Volodymyr Zelensky will be here. How will he be reassured by European leaders? And can Europe, if push comes to shove, support Ukraine alone? There's a lot of question about what to take seriously with Donald Trump and what to take literally. This is the same question around tariffs. So I think for European leaders, it's going to be parsing that seriously versus literally in their response to a new President Trump administration.
Ollie, I like that you're colour-coded with what Republican red behind you, Democratic blue. Maybe you should be more tilted towards the red side at this point, given the electoral outcome for the US. Is it going to be a game of two halves, I guess, between Europe and the US? To what extent is Trump going to drive? Is he going to drive divisions within Europe, or is he going to unite Europe and they come closer together to contend with those potential tariffs and tensions?
And Tom, I think that is the absolute key question here. And I think that by the sort of very venue where this meeting is being held really brings that question into relief. Remember, Viktor Orban and the Hungarian presidency of the EU Council is rotating right now. They hold it right now. The slogan they have adopted for that is "Make Europe Great Again." It is very hard to misinterpret what Viktor Orban means by that. But what all the leaders here will be doing is trying to skew this, saying that basically Donald Trump is an opportunity for Europe to finally put its competitiveness in the center stage here. Mario Draghi will be here. This is the first summit in which they're supposed to discuss their competitiveness policy. I spoke to the Estonian Prime Minister again about this and saying this is really a wake-up call moment for Europe. Have a listen.
Maybe the comparison is not the best one, but usually when a person gets a little bit older and gains a little bit in kilograms, wake-up call comes suddenly. And after that you will work out and get fit and so on. But Europe is the same. You get fitter, and it's not a bad thing for Europe.
So the Estonian Prime Minister, they're likening Europe to someone who has gained a lot of weight, gotten old, and that basically now Donald Trump will inspire them to get back into shape, which is potentially an apt metaphor given where we're standing right here. The real question is, if we carry that metaphor to its absolute limit, the sort of strongest players on Team Europe are Germany and France. When last time Donald Trump was in presidency, you had Emmanuel Macron, bold, supported, very sort of strong mandate in France. He no longer has that. And in Germany, you had Angela Merkel, who, again, was a very strong European figure. We just had basically the collapse of the German government. So it's a very different story here for Europe today.
Yeah, love the sporting analogies. Does Europe slump back onto the sofa and continue watching the sport on TV, or get match fit for this contest? Bloomberg's Oliver Crook, thank you very much indeed in Budapest. We're going to be speaking, by the way, to the CEO of Commerzbank. We have been speaking to the CEO about the possible integration with Italy's UniCredit. Banking mergers, of course, part of the agenda for European leaders. That conversation is coming up next. This is Bloomberg. Welcome back. Commerzbank has raised its full-year outlook and said it plans another share buyback as it seeks to fend off an unsolicited approach by rival UniCredit. Speaking to Bloomberg, CEO Bettina Orlopp said UniCredit's approach so far has been, quote, interesting. Take a listen.
Whatever comes on our table, we will definitely look at it. But in the moment, I do not have anything to judge because there has been no reach out on that.
There's no reach out. So have you had any conversations, any direct interaction with Andrea Orcel over the last month or so?
No, we had, as stated before, we had this very, very short interaction right after the first purchase, and then we had a longer, very professional investor meeting, and there will most likely be an investor meeting after Q3 to discuss the results, but nothing more.
He says he sees value for the business, for even for the sector, for Europe from this kind of tie-up. Do you see any value in a tie-up?
Well, I mean, there's always, when you look on integrations, you have cost synergies. Clearly, you can achieve specifically when you have domestic integrations. And cross-border synergies are currently difficult to achieve, as we all know, because there's one missing piece of the puzzle, and that is a banking union, which is not completed, which you need to really see cross-border synergies, which might make a lot of sense, but we don't have that yet. So when we talk about benefits, it's about domestic benefits, and I mean it's very clear, and we always said that when there is something, we will look at that in the interest of all our stakeholders, which is not only the shareholders but also the clients and the staff.
We do have some of the banking union elements in place, but not the deposit, not all of the elements of the deposit scheme. Is that the missing piece then? That's what would make this
missing piece.
OK, the CEO of Commerzbank, Bettina Orlopp, speaking to Anna Edwards. Coming up, Donald Trump's comeback rolls on with a Republican clean sweep in sight. We bring you the latest analysis next. European futures pointing higher. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian shares tick higher after the S&P's best post-election day in history. The Fed and the BOE both look set to cut rates today, with Donald Trump's return clouding the outlook. Kamala Harris concedes the US election, promising a smooth transition of power. She tells supporters to keep fighting for their ideals.
While I concede this election, I do not concede the fight that fueled this campaign.
Plus, political turmoil in Germany. Chancellor Olaf Scholz is calling for a snap election after firing his finance minister as his coalition collapses over government borrowing plans. Let's check in on these markets then. Germany, of course, reflecting on the political uncertainty in that nation. But, of course, the Trump trade is still front and centre. The rip-roaring gains that came through for US equities yesterday, with the best performance for the S&P, as we said, in history post-election, gains of 2.5%. European futures now pointing up by 0.4% after actually losses for European stocks yesterday. FTSE 100 currently looking to add 31 points. Commodities giving a lift to that index pre-open. S&P futures looking to gain further, up 0.2% after the record that was hit yesterday. Nasdaq 100 futures looking to gain 63 points. The Nasdaq 100 ended up 2.7% yesterday. Let's flip the board and look cross-asset. The sell-off in US Treasuries yesterday, it's moderated. You saw a 16 basis point pop in the yield on the benchmark 10-year yesterday. Today, currently flat on the US 10-year, currently at 4.42. We look ahead, of course, to the Fed decision expected to cut by 25 basis points. But the commentary from Jay Powell on the path ahead will, of course, be scrutinised. Euro-dollar at 107, getting a bit of a lift on slightly softer dollar in the session today after the dollar gained a little over 1% yesterday. The pound also in focus. The Bank of England expected to cut rates. 129 on the pound, currently up 0.4%. Brent also gaining 0.5% at $75.26. Now, traders are taking stock, as we mentioned, as Donald Trump and the Republican Party bask in a decisive election win. They may get a clean sweep, of course, with the House still in contention. US futures pointing to gains, as we talked about, after the S&P had its best post-election day in history. For more, let's bring in Bloomberg's M-Live strategist Mark Cranfield. Mark, how much further, then, can this Trump trade run?
Probably some distance. If you think back to 2016, these similar kinds of themes, strong US dollar, steepening US curve, higher yields, and a very buoyant US stock market, that ran really much all the way through to Inauguration Day from Donald Trump, because soon afterwards we started to see some of the clearer policies which he was ready to enact. We can expect something similar around this time. The momentum is going to be very good. You wouldn't expect too much information in terms of what specific policies are going to come after January, because they'll probably want to keep a lid on some of those to have the element of surprise as well. So markets will probably think they've got a relatively clear run all the way through to year end. In the background, of course, they're also getting help from the fact that the Federal Reserve is most likely to lower interest rates again today. And around the world, we generally are in a trend of the major central banks pushing interest rates low, which of course just fuels into what is already quite a strong situation for global markets. And we've got the China MPC this week, where more big numbers are expected in terms of stimulus to hit the Chinese economy pretty soon as well.
Yeah, that decision from the National People's Congress will be an important element as well, won't it, as you flag. Talk to us, though, about the central banks, Mark, because things have changed since the election of Donald Trump. Yes, we expect cuts from the Fed and the BOE today, but to what extent do we see central banks diverging next year? How are markets repricing around the ECB and the BOE?
Well, probably if there was a surprise to anybody in the major markets yesterday especially, it was the weakness of the euro. I think people were a little bit taken aback. They expected the yen and the yuan to be relatively weak, but maybe not so much the euro. Now, what seems to be happening there is that people think there is a risk that potential new tariffs on Europe in relative terms could be more severe than they are on China, in the sense that they probably don't exist to now, and then Europe is not so well prepared for it. So that's a bit of a shock in that point of view. And that means that in turn, you will have the European Central Bank will probably have to do even more heavy lifting, because if the Federal Reserve next year is going to slow down the pace of rate cuts possibly take a long pause, that means that the European Central Bank, who are probably counting on the Fed cutting interest rates by at least 200 basis points next year, that now looks very unlikely. So the European Central Bank will be thinking, well, if there's a risk to our economies and the Fed doing less, that means even more from the ECB. That's what the markets are beginning to price into the euro. On top of that, as you announced at the beginning of the show, we have now the risk of a German early election as well. As if the euro didn't have enough problems, it may now be dealing with a snap poll. And look what happened the last time France had a snap poll. It was not enjoyed by the euro currency.
Yeah. That challenge for the euro then, political uncertainty in Germany with all the question marks about what a Trump presidency will mean for the Eurozone. Bloomberg M-Live strategist Mark Cranfield, thank you very much indeed for how markets are readjusting to this new political reality. Talking of which, Kamala Harris conceded, of course, yesterday in a speech, conceded the 2024 presidential election officially to Donald Trump, whose victory saw him flip, of course, key swing states and the GOP retake control of the US Senate. The fate of the House yet to be determined, but Democratic hopes of retaking the chamber seem to be fading. For more analysis, very pleased to say we can bring in Thomas Gift, Director of the Centre on US Politics at the University College London, UCL. Thomas, thanks for joining us in the studio this morning. Let's start with a question about the House then. Is it your expectation that the Republicans are going to get a clean sweep? They've got the Senate, they've got the presidency. Do you think they get the House?
I think it's going to be close, but I think ultimately they're going to get it. I mean, we can see that the huge red wave yesterday was enormous. And so I think that this is a general trend against the Democrats in favor of the Republicans. Trump, the Senate, the House makes sense. And of course, if there is a clean sweep, that'll make it much easier for Trump to get through his legislative agenda.
On that, then, what extent, talk to us about the kind of power dynamics where you have control of the Senate, the presidency, the House, and a Supreme Court as well that's given you a certain degree of immunity when you are in office. What kind of power making or what kind of leverage will this president have in the context of presidents going back for the US? How powerful will this position be for Trump in allowing him to enact that policy agenda?
Well, I think that this is going to be Trump unleashed and unbridled even by the prospect of a new election. And so there still are constraints. In particular, Republicans will not have 60 votes in the Senate, which would allow it to override the veto, or allow bills to go through. So there are some challenges there, but generally it's great for Republicans.
What are you going to be watching for in the first 100 days of this presidency? That, of course, starts in January.
I'm looking for two things. So one is what kind of tone Trump sets. He spoke relatively conciliatory at his announcement yesterday, but will he go on this retribution tour that he has promised to use the federal government, use apparatuses of the executive to go after political adversaries? On policy, I expect a slew of executive orders, deregulation, pushing for tax cuts, diminishing them from 21% to 15%, and tariffs. Of course, tariffs are the big issue. Trump has been very ideologically consistent on tariffs. He's promised 10 to 20% tariffs on all imports into the United States, upwards of 60% tariffs on imports from China.
When it comes to the Democrats, there will be a lot of soul searching, as there always is, on the back of a political loss of this size and scale. What does it mean for that party, do you think, in the months ahead? 2 years' time, there will be, of course, the midterms.
Well, I think that Democrats have to be honest with themselves, and what they're doing is not resonating with the American public. That much is clear. I think there are going to be a lot of questions about procedurally how the primary process worked. Of course, Joe Biden waited a long time before he stepped down. Kamala Harris sort of joined this fray. She was only the nominee for about 100 days. I think that did present some challenges for her. She got a huge sort of boost in positive media coverage right when she became the nominee, had kind of this honeymoon period, but she didn't have a message. There wasn't a clear message about what she would do in her first 100 days in office. And I think that ultimately hurt her.
What do you think they're getting wrong in terms of policy? Because on some analysis, Biden has been one of the most successful presidents in terms of pushing through policy, including the Inflation Reduction Act, the CHIPS Act, and, of course, the Infrastructure Act. What are they getting wrong on policy?
I couldn't agree with you more. In many ways, I'm surprised how low Biden's approvals are simply because of how much he has achieved. Oftentimes, with opposition from within Congress. I think ultimately it's about outcomes, right? Joe Biden may not be responsible for inflation, but when you look at prices of food and groceries pre-pandemic till now, it's up 20 to 25%. That ultimately was the big issue. I also say that I think Kamala Harris made a strategic error by making this election a referendum on democracy, saying that democracy is at stake. If you look at polling data, only about 3% of Americans said that democracy was the number one issue in this election. Upwards of 20 to 25% said it was the economy.
Well, on that question of democracy, given the power that he's going to have and given everything he said on the campaign trail, are we going to be looking 4 years down the line, looking back at this moment, saying this is the start, the beginning of the end of full democracy for the US?
Wow, that's a really big question. You know, I am relatively sanguine about the future state of democracy. I think what we saw in 2020 was that democratic institutions held. Of course, it did require some individuals to make good decisions, honorable decisions at the right time. But if you look at what happened, we saw all the January 6th rioters, many of them are in jail. When you look at Donald Trump's challenges to the electoral results, they winded their way through the courts where most cases were summarily and correctly dismissed. But I think there's certainly a worry, given Trump's words about going on a retribution tour and using
the Supreme Court leans in his favour. He's going to be in charge of the DOJ, and he has a vice president who says that he wouldn't have accredited that.
I completely
election.
agree with you. I mean, he is sort of untethered.
What does it mean? I know, look, the domestic politics of the US is your focus, but you're sitting here in the UK-US relations. We have a Labour Party. We have some tensions there in terms of their relationship. How does the UK navigate this?
Well, I think it's interesting because during Donald Trump's first term in office, he really had a close personal rapport with Boris Johnson. And I think that was in large part why the United States and the UK worked so well together during that period. Certainly that's not going to be the case with the Labour government and Keir Starmer in particular. And so, yeah, I think that there are certainly some worries about what these tensions will portend for the special relationship.
OK, Thomas Gift, thank you very much indeed. Really appreciate you coming to the studio bright and early for us today to continue to unpick and give analysis around the shifting sands of US politics. Thomas Gift, Director of the Centre on US Politics at the University College London. Coming up, our exclusive interview with Hensoldt's CEO, Oliver Dorre. The German manufacturer's shares have surged this year, amid strong demand, domestic and European-wide, for its missile defence system radars. We'll be talking about the Trump impact on the European defence sector and, of course, the political uncertainty in Germany. Stay with us for that conversation. That is next. This is Bloomberg. Welcome back. Happy Thursday. We're going to do a deep dive for you right now in the defence space. We'll start with some earnings crossing from the key German defence manufacturer, Rheinmetall, confirming its forecast, and it still sees full-year sales of about 10 billion euros, slightly marginally above the estimates. Full-year operating margin as well expected to come in at 15%. That's at the higher end of the previous range of between 14 and 15%. And sales coming in marginally above the estimates of 2.45 billion euros in the third quarter. A crucial component, of course, in the defence space of Europe. Speaking of which, German defence electronics firm Hensoldt has reported revenue growth of more than 20% in the first 9 months of this year amid strong demand for its radar systems. Orders for its air defence detection technology are rising as the war in Ukraine, of course, continues to rage. For more, very pleased to say we are joined now by the CEO of Hensoldt, Oliver Dorre, joining me from Berlin. Oliver, there's a lot to talk about. There's the earnings story, there's the politics domestically, internationally. I have to start with the domestic politics. Talk to us about your reaction to the collapse of the German government, what it means for your company and the sector.
Well, thanks for having me, Tom. And indeed, the situation at that moment is still very dynamic. And I think it's too early for a final assessment of the consequences and the impact for the defense sector. However, yesterday in the statements of Chancellor Scholz and as well of Vice Chancellor Habeck, I heard a very clear commitment from both for spending on German defense as well as for supporting Ukraine. So I think this commitment is for the defense sector and especially for Hensoldt reassuring, of course, in a time of turbulence.
You could be looking, arguably, at a more defence-supportive chancellor in the months ahead.
Well, let's see now. I mean, the Chancellor, and I think that's the important thing, what we heard is that they at least try to close 2024 without any turmoil. So he is calling for the confidence vote in January, which will lead to elections then in, I think, end of March. That's what they announced. So still some time ahead. But anyway, I think the sentiment in Germany, even now at the backdrop of the US elections, is that they confirm a strong spending on defense. And I think that was a discussion on the budget they had already.
OK, well, on the US elections, is the election of Donald Trump good news, ultimately, for the European defence space?
Well, I think very clearly you saw the sentiment on the market yesterday, where we saw at least a growth for the defense sector. Also, Hensoldt releasing our earnings results. We had quite a bumpy up and down, finally closed around 2% growth. So very clearly, I think this is a call for action for Germany and Europe to take responsibility in defense spending. So while we are still struggling with a 2% GDP spending defense budgets, I think at the backdrop of this vote, it is very clearly we should be aiming for 3 to 3.5% of the GDP.
OK, a call for action, 3 to 3.5%. You talk about the earnings. There was a small upgrade to the outlook, part of that down to the momentum around orders. Oliver, what is your projection? You look out to 2025. What are those orders looking like?
Well, very clearly, we had a couple of shifts also to next year. For sure, we will see the continuation of air defense orders floating in. For the European Sky Shield initiative, we have the first 4 orders out of a total of 23 nations that have joined. So I think that will be a strong element. But it is also obvious that for this year, as we reported, we see quite a breadth in our orders, which is important for the resilience of our growth model. So also we had from ESG, the company we had acquired, we have a major contract coming in on logistics, almost 100 million. We see that in the air traffic management segment, we have signed orders for air surveillance radars with the Australian Space Centre. We have also signed a contract with the German DFS, the ANSP, on bringing our passive radar, certifying, qualifying it for civil air surveillance. So I think in that breadth, I'm pretty confident about the continued growth also in 2025.
Yeah, and you talk about the integration of ESG, and clearly that came through as a positive, as you say, in the most recent earnings. So they're a defence logistics or integration business. Does that give you the appetite? You've integrated the business largely now. It's come through positively for the earnings. Does that give you the appetite for more acquisitions, Oliver?
Well, first of all, I have to say we're really proud. I mean, largely integrating ESG with 1,400 people and roughly 300 plus million of revenues. Doing that in only 200 days, I think that's quite an achievement, and that shows that Hensoldt really has the capacity to grow also inorganically with acquisitions. As we're heading forward, I think by the end of the year at our Capital Market Day, we will release our new North Star Vision 2030. And very clearly, inorganic growth will be part of that strategy, looking at internationalization on one hand and looking at technology on the other hand to fuse and catalyze our digitalization initiatives.
OK, inorganic growth will be part of the strategy. Which markets are you targeting within Europe and overseas, outside of Europe, in terms of that growth push, Oliver?
Well, I have clearly set an ambition that as we go forward, we will have like 50% continued dependence, which is our anchor on the German market. I think Europe is really growing. That's what we see as orders are coming in. This will be around 30% of our future business. And then we look at 20% global markets. So I did quite some travel recently. I joined Chancellor Scholz in his mission in India. So I took a lot of insights on the market, met a couple of companies. So that is definitely also in line with German G2G foreign policy, a focus for us. We look at APEC. I visited Japan, Singapore. I think that's clearly, let's see Middle East, how that continues. Okay. And of course, US, I visited the AUSA. You know, we are part with the laser rangefinders in the M1 Abrams tanks. So also strong interest on passive radar. I think that's the focal points as we go forward.
Okay, global ambitions, clearly. Hensoldt CEO, Oliver Dorre, thank you so much for your time. The stock is up about 30%, a little over 30% year to date, and a modest upgrade to the earnings with a touch, of course, on the politics of Germany and the US. We appreciate your time. There's plenty more coming up. This is Bloomberg.
This is the emergence of a new power structure in the United States.
We now have a new investment regime, most likely for the next 4 years, or at least the next 2 years, until the next midterm elections.
The markets are reacting in an incredibly rational fashion.
You can actually commit to some of those trades.
Some of the knee-jerk reactions that we are seeing may get reevaluated.
I think it could be small caps that end up correcting here.
I don't think it's a fade.
Animal spirits may benefit more of the equity investor versus credit investors.
I do look more to the equity markets, and I think of what does this mean for the places I want to be in the equity markets, and that's why you go to small caps, that's why you go to regionals, that's why you actually probably put together a basket of stocks that has a high percentage of domestic revenue.
Guests reacting to Donald Trump's resounding victory, of course, in the US election yesterday. And those small caps, by the way, rallied close to 6% by the end of the close. And you had the best performance post-election day for the S&P on record. So the Trump trade still in focus, taking a bit of a breather in the session today. US futures pointing up by 0.2%. But again, after the 2.5% gain for the S&P yesterday, the Bloomberg Dollar Index, a little softer today, down 0.2%. But of course, it rallied more than 1% yesterday. Pain across the trades around the Mexican peso and others, of course, exposed euro as well, taking a big hit. When it comes to the 30-year, the 10-year as well. The 10-year yield, by the way, jumping 16 basis points yesterday. Today, again, a bit of a breather across treasuries. And Bitcoin soared yesterday above 75,000 on a down leg right now. A bit of profit taking, it seems, across the crypto space. Let's flip the board and have a look at what to expect from the Bank of England, because, yes, Trump's victory makes things more challenging for these central banks. You have the markets pricing in a cut today, but December is very much still a toss-up. In fact, a 40% chance, just a 40% chance that the BOE will cut again in December after today. So we will listen in, of course, to the Bank of England Governor Citigroup saying it will. The budget will make it more difficult for the BOE to cut as aggressively as many had expected. We're going to bring you that rate decision later today. Plenty more coverage. Stay with us. This is Bloomberg.